Welcome to the Trading Lounge and the Day Ahead Report. And I just thought we'd have a look at the ASX 200 as it's approaching the 5,000 level. This is our long-term wave count here, and as you know, we've been looking at the big bear market as an A wave, and the B wave would be the A, the B, and the C here for the B wave. And once that's completed, then we'll look at a possible large C wave through here, and then the next bull market. And this is just basically, this whole thing is just basically a big picture of a market moving through the number 5, the trading level 5. And you know, you can go and have a look at stocks at $5 or 50 cents and so forth. It's all pretty much the same sort of thing. So yeah, look, we're up in this area here now. So and looking at this, so this A and B and C here, this would move back up to 61.8% of the big bear market we had, which is around the 5,400. But I know I wouldn't sort of hold on to that with any hope. We'll just do our best to count the wave structure up through here. This move in the A wave here, because an A wave can be in 3 waves or 5 waves. In this case, it was 5 waves. So we know that there was going to be another 5 over here for that. That's one of the good things with Elliott. The B wave is always in 3 waves here. So that's been completed. We can have a look at that in a moment. So we're really tracking 5 waves up through here. Now, this B wave here was a little bit tricky in its ending here, which wasn't sort of really clear. It just gave us a sort of a bit of a red herring, really. And I'll just sort of explain that by looking at the a daily chart for the ASX 200 here, just to point out what I mean by that is that this is basically the pattern through here. So we've got our big bear market through here, and we're looking at the 61.8 retracement level, which is up around here somewhere. So that's all fine. But working with large numbers, they tend to skew the patterns, and obviously they attract the price, but that's what we'd be looking for. And so this would be the A wave up through here, and this would be the B wave in 3 waves here. So the B wave's quite easy to see, isn't it? But when we get down this A, B, and this C wave here to make the bigger B, this C wave should have 5 waves in it, and it does, but it's just a little bit tricky, because if I just open this up here, is because when we had this sharp drop through here, the market rallied, and it should be rallying in a wave 4, and which it did. And this move down through here didn't make a new low to create that 5th wave down. So that 5th wave would be the 1, the 2, basically the 3, the 4, and the 5 down through to here. Now, on some markets, like some of the smaller indices, we could see that this move down through here became a new low through here. So we could count that 5 waves down, and that's sort of one possibility that we need to consider, that this was actually the low of the 5th wave here. So just but what they call in Elliott a truncated 5th wave that never came to pass. So we need to bear that in mind. We don't need to be sold on that just yet, but it's with Elliott, you need to leave things on the table there. So if that was the low here, that should have been the low of the B wave here, then this would be wave 1 up through here, and then this would be the A, the B, and the C for wave 2 here, right? And this is all of the 3rd wave coming up through here. So it would be quite a large sort of pattern as such, like this. This 3rd wave has still got more to go through up here, such like that. So what would be looking in this 3rd wave here would be looking for 5 waves in that wave. So we've got, and I'll go over this in a moment, we've got up for 1 here and back for 2, and this is the 3rd wave, so there'll be a 4th wave and a 5th wave creating the first high above the level, and then we'll have our correction. So essentially we'd be looking at this structure here a little bit like this here. Let's bring that into perspective here. I'll just move that from a moment. So we'd be looking at this up for 1 here, an A and a B and a C here, because that all works quite well internally there, and then the 3rd wave would look like this. So this would just be the top of the 3rd wave here, and then we would have a a correction here for the wave 4. Wave 4s are normally complicated, and then we'll have another little 5-wave structure up here to make the 5th wave here, but this would be quite small here because wave 1 here was small and the extension is in wave 3, then wave 5 would be small here. So, and then that would be the top of the large B wave, which would be up here. Okay, so that's one possibility as such. The other possibility is that that this is all the 4th wave through here. This is just a complicated this is the bottom of the 3rd wave. This is all the 4th wave here, and then this is the 5th wave here. So this is the actual low here. And if that was the case, then we would only get this 5-wave structure coming up through here. We wouldn't get these guys here. Okay, so this is something that we need to work out when we get there. But in the meantime, on both counts, you can see that one way or another, we've got this little 4th wave correction here to work through. Now, this 4th wave correction here, the correction here could be in terms of the correction pattern. It could be something. It could occur like this, so we have it here. It normally pulls back 38.2% of the 3rd wave here, so it would pull back something like that. If, however, this I kind of expect that a little bit of a market to push up here a little bit higher, then the wave 4 will be more so across the 5,000 area. But one way or another, this is going to unfold here, so there's not much that can happen. It can come up to the 5,000 and then react from that 5,000 there. Okay, so it could just do this. That's one possibility. The other possibility, it could push up above that and then it would work and stick sort of closer to the 5,000. So instead of coming back to 4,800, it would really only come back to 4,900 as such. But in one way or another, there will be some type of correction here. There will be hedge funds that have large orders sitting at large numbers, and and that's what's going to sort of rock that boat a little bit there. So yeah, that's it really. So just sort of pointing that out. Different markets are leading. So we've got the banks are leading to in the way up, and their pattern is very, very similar to what's going on here. The materials sector is really lagging. So if we look at the XMJ, which is type it in here, you can see that it really hasn't moved up as much as the finance sector has, which is I'd prefer to look at the banking sector, which is the XXJ as such, and you can see here that that's really cranked up sort of nicely, but we've got the same sort of dilemma here as well. In this particular case here, it does seem better that this would be the wave 1 here, the A wave, the B wave, and the C wave for wave 2, and then this is all the 3rd wave moving up through here, and in the 3rd wave we'll have 5 waves, and that will be the 1, 2, 3 such here, something like that. And then that would just be the top of the 3rd wave. There'll still be a 4th and a 5th there. So as I've mentioned before, that I felt we're kind of like 2/3 of the way through the bull market as such. So stocks will still continue to move higher. Some stocks are running like this. Other stocks are, say, like Woolies got this is Woolworths here. This is this is obviously a wave 3 here, isn't it? It's a nice big strong wave here. This would make this a wave 4. So in due course, that top would be taken out through there. So different stocks are doing different things. There does appear to be a little 5-wave structure up through here, so that can fold back into the 30 here. We've checked for support before it moves further up. But each sort of sector is got its own sort of wave pattern. But once again, they're all still got more to go in them. So let's just have a look. This is the ASX CFD here, and it's approaching the the 5,000, as you know, and it's going to struggle, and you can see it's struggling through here at the moment. It's still got more upside. So from wave 4 here, we've got a little 5-wave structure up through here. So that's all like positive. That's positive. We've got a little 4th wave here. It's going to be sort of squashed up there. I'd probably suggest that trading around this little area here is, not much range is going to be in there. You're probably better off looking at the Australian dollar. It's in the same sort of time zone, so to speak. So there'll be more range in that. Moving on to the US markets now. Look, there's not a lot of change here. The Dow is still looking at 14,000 through here. We understand that this is corrective. We should see a push up here further. This can be counted in different ways. So you can see that it's really difficult to it's not really giving a nice clean wave structure here because it's hard up against the 14,000. When we look at the S&P 500, which is a little bit sort of freer because it had found support on the 1500 rather than having it as a sort of a resistance there. It took time to work through, as you know, but this is got more sort of upside here. So we sort of see this as up for wave 1 here, and we'll see a little ABC for wave 2 here, and then a move up further there. This is a bit more like this here. So the 1510 is a really nice support level through here. The 1515 may even stay as support. If not, then the 1513, the previous low here. But we should expect some sort of correction here. In this market here, we can look, it appears that we've got like a 5-wave structure here, and that's fine. That's why we're looking at wave 2 here. But when I look at the cash market, the S&P 500 cash market, this particular correction that's occurring across here is actually a 4th wave, and we should see a 5th wave push up there on the cash market. So have a look at that, and that would make that 1513 stay in place at that point there. So that's sort of interesting there. The European markets. This is the FTSE here, the 4-hour chart. Now we do have a 3-wave structure here, so it's a wave 4, so it could get a bit sort of uglier, but we do have a 3-wave structure here, so it is corrective. So that means that we should see more upside eventually through here, and it can be from here. But what you'll also notice too is that we've only got 3 waves up through here, so that's corrective to the downside. So if it fails at 6,300, well then it can move down further as well, because we expect the DAX to pull back further as well. If, however, we do start to develop a 5-wave structure up through here, then it's the 6,300 here that you'd want to be looking for support on here. Any long trades would need that 6,300 to go long on. If you're splitting hairs, then the 62.72 as support or resistance, give it time to mature, will be your landing pad for going long or short there. Okay, let's have a look at the commodities, because the precious metals have fallen out of bed, and they're kind of influencing and pulling the base metals with them somewhat. Crude oil is strong, so let's have a look at those. Okay, looking at gold here, we were looking at the 1672 becoming a retested resistance to get a short in here, with the view of considering this wave count here of down for 1 here, an A and a B and a C back for 2 here, and a series of unfolding structures here. So that's unfolding nicely. The medium level here, 1650, that should become the retested resistance there, and we should see that roll over down to the 1630 there. It could take some time because it's like a little wave 4 there, because we've got that strong wave 3 there. So the wave 4 is going to, sort of kick and struggle around here for a while before it drops. If we have a look at that on a smaller time frame, then this is pretty much how it pans out. Just going back here, that's the wave 2, you know where that is. So pretty much we've got the wave 1, the A wave, the B wave, and the C wave. Pretty tricky trading, but there you go. That's wave 2 there. So we're in wave 3 coming down, but in wave 3 we're looking for 5 waves, and that's wave 1, and that's wave 2, and the wave 3 is this one unfolding down through here. So it's still got a fair way to go. And then we've got, from that wave 2 there, we've got little wave 1 here, splitting hairs really, wave 2 to here, then wave 2 to here as well, and then rolls over from, this is all subgroup 2 level here. This is where the short should have been placed here, because you can kind of see that it's, you know, it's founded as a resistance, and once you know your corrections, then you know, that little pattern there, so forth. But anyway, this is still unfolding. In fact, that this little wave 1 and wave 2 here, this may not be the 3 here and the 4 here. This, once this finishes its little struggle here and drops down, that's probably the wave 3 here, and the wave 4 there. That's just the smaller, because that appears to be wave 1 in there, wave 2 to here, wave 3 to here, wave 4 and wave 5, just to get this wave 3 low here. So there's further to go. Expect to bounce around the 1640 there, but that 1650 here, the medium level here, that's it's in there, so that will eventually become resistance. And yeah, that's that. Silver's doing much the same thing as well. So when we're looking at silver here, the same things as well. We're looking for shorts on the in the subgroup 2 here and the retest here. Of course, it's going to grab hold of the 31 here, but the wave structure suggests further downside from there. If you're short, then it doesn't hurt to cover into this particular area through here. There will be obviously support here as well and here as well. So just focus on the gold count for the silver as well here. The base metals, just bring that back a second. Okay, so we were looking for, this is copper here, and we were looking for this to be a wave 4 through here, but as I mentioned, it did kind of look like a 5-wave structure, and then we've only had 3 waves up through here, so we really need to move this wave 4 to a larger wave 4 over here, and that would be the A, the B and the C here. But I can also see too that this is a strong little 3rd wave down through here, so there'll be a little 4th wave in here, and then there'll be another little 5th wave down through here. So we can expect softer metal prices in this space to come through here. If the 370 and the 372 become like, I know that they're below that and they're spiking down, but once that little 5 waves finished through here, there'll be a little 3 wave back up or a 5 wave back up. If we get a 3 wave back up, then we're going to go down further. If we get 5 waves up from this low point here, then we'll be heading further up this way. It's as simple as that. And if it finds the 370 as a retested resistance, then we've got overlapping wave structures here as well, and then we've got a larger pattern unfolding still. Now, we knew that we had, just going back, just doing a bit of analysis work here, we knew that we had 3 waves here and we had a positive wave here, so we knew that we would be making new highs here, and because we got 5 here, we would get 5 here. So that's been the case to here. We knew that there would be a reaction at the 380, and that's what we're doing now. We're working out that it's a 4th wave. We thought it may have been finished here, but it did appear to be a 5-wave structure here. So if we get 5 waves in the opposite direction, that means that we get another 5. So it's opposite from this direction. So we got 5 in this way, because 5 waves gives you the direction of the market. So we've got 5 here. That means we'll get another 5 over here. And that's sort of unfolding there. But if this moves down, too much into the top of wave 1 here, then it's going to cancel out the larger move that we've got to the upside, and we would have to count this then as up for wave 1, back for wave 2 here, and the top of the 3rd wave here, not this 3rd wave, but of this wave would have to go here as wave 3, wave 4 and wave 5 here, and then looking for a larger thing here. So I just want to see this unfold here and fill this space here before we make any judgments, because as I mentioned when we're looking at BHP, if I can find that, Yep, here we go. So we're looking at BHP at $80 here, and we were considering that this was 5 waves down through here. So this would be the A wave, a B wave here, and a C wave here. So that move down in copper would help us get that A, B, and C wave here before we see any upside. So that's why I haven't gone long in this market just yet. I wanted this to, in the materials sector, in some of them we have, but as tempting as it was in BHP and Rio to go long, but we just wanted to hold off until this had sort of completed itself, and it's getting that way now. So we may be looking at a long trade setup as such. The other thing in the mix is the US dollar, of course. So this is the US dollar here on a 2-hour chart, and we've been watching this move up through here, and we know that we're looking for a target of 80.50, and we had this trend line coming through from November the 16th. So we're hoping, I know it's not a good thing to do in the market, but we're hoping that this would be the top area. It may not be finished yet. We've got no evidence of a downside just yet, but if this is a top in this area through here, and the market may move up a bit further first, but if it starts to move down and finds the 80 as resistance here, then we will see the base metals push up to the upside. If, however, because this will be the 80's the line in the sand, if this finds support on the 80.50, then we're going to see a move to the 81. And if we're going to see a move to the 81, well, then we'll see a higher rally still. So it is really important. We just need to allow this to sort of play out through here. Let's have a look at the euro. So for the euro here, first of all, we got Draghi speaking tonight at 2:30 a.m. and that will have some sort of positive influence, I'm sure. However, this particular pattern that we're following to the downside is we've got it as an A and a B and a C wave down through here. So it's a corrective wave. This C wave that we're following at the moment would be the down for 1, the ABC for 2 here, strong third wave, which is fine. The fourth wave we've got to here, and the fifth wave down to here. Now that's fine, and that could be the low there. Now if that is the case, then still wait till you get support on top of group 1 here, the 134.30, even better 33, 134.33 there. Wait to get support on that. That will be the confirmation. The other way is that this wave 4 here is actually not complete. This is actually the wave 4 still occurring across here, just a bit more complicated, and a fifth wave to move down here further, closer to the 133, which is possible. So that what I'm pointing out here is that you'd only go long if you had support on top of group 1 there, the 134.30 at that case. Okay. The other thing that concerns me a little bit is that, of course, we need the US dollar to turn as well. And if I just go to the US dollar on this template that I'm on, this here is group 1 here for the dollar, so 10, 20, and 30. If support is found on the 30, which seems to be developing, then we can start looking at the 50. So support here means that price point here, the 50 would be reached. So that's something to look on the flip side if you're trading the euro as such on that side. The other thing that concerns me about this A, B, and C here is the personality of the wave structure. And what I mean by that is that that normally the A wave is the sharp wave down, so coming down sharp, and then the C wave is more of an angle. But the strong third wave here sort of places it in, doesn't place the personality of a C wave in it. It's putting the personality of a stronger move to the downside. And the other point here that I need to make is that it's the wave structure is actually expanding to the downside. So that's what you'd call a trend as well. So this C wave here is is much bigger in size than the first move down through here. So, when a trend is moving to the upside, as you know, everything about it expands. The trends are bigger, the corrections are bigger. It expands on a ratio. It just expands. So that's what's also occurring here. So there's 2 points here. There's the expansion, and there's the extra strong third wave in here that is really dictating the direction. So I think trade what you see at this stage here, and there's sort of support on the 134.30 for any longs. And if you see the market trapped under the 134 or the 133.72 there, then you can look for short positions there, and you'd also be looking for support on the US dollar at the 80.30 for that as well. Just be a little bit diligent, but be on the right side of the closest, largest number. The Australian dollar here, as you know, we've been tracking it down in little wave count, being reasonably accurate, and we're looking for the A wave to move up, and that's in place. We're looking for the B wave here, which appears to be in place now, and if that's the case, then we should see a C wave up here. Now, a C wave is always in 5 waves, so we'll see something like a 1 and 2 and a 3 and a 4 and a 5 coming up into this area through here, which it'll struggle at. So there could be a short position trade coming up through here, getting ready. So that's something to look forward to. The C wave up here should have some sort of relationship to the A wave in terms of length. So that's something there that would be just a flat, an A, B, and C flat. As you can see here, this move down through here appears to be in 3 waves, which would suit the B wave, because B waves are in 3 waves, so they're normally a 5-3-5 structure. But what I wanted to point out here is that if the market fails right from here and then starts to move down here and creates another low here, well, then that would give us 5 waves down, wouldn't it? It would give us the 1, the 2, the 3, the ABC for the 4th here, and then the 5th wave through here. So once a new low is made here, perhaps into the 102.50, because it wouldn't go too long, because that would make the extension in wave 3 there, so waves 1 and 5 would be the same. So a breakdown here would probably be a false break in the first instance, because we'd have 1, 2, 3, 4, and 5. Then we'd get an A and a B and a C coming up through here. So you can look for, if it comes up in 3 waves and then fails again, and using the 102.72, as I mentioned before, 272 or 772 carry more weight than just a normal 72, and we're starting to see that play out here as well, as you can see. So I wouldn't be surprised if there's more to this. So either 5 waves up here, get ready to short, or if a new low is made here, just hold your horses, look for an ABC correction back, and then look for the 72 to become the resistance and start moving in short from that point there. And the weaker commodity prices, the copper would help support that as well. So keep an eye on that, and of course the US dollar as well. Not that's got a lot of bearing as such. And of course, you know that the year in the snake, and the Chinese are celebrating and have the week off. Lucky guys. Alrighty, well that's it. So look, not a lot. Oil is strong. Precious metals are weak. Base metals are following them somewhat, so it's kind of to go into sort of protection mode somewhat, or look for shorts on the precious metals. Alrighty, good morning and good luck.